Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 2 of 2018. Hey guys, Jedi traders, as always, please seek financial advisement when trading with your own money, as these videos are, or for anybody else's money, as these videos are for educational purposes only. To support your knowledge in the marketplace, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, here we are, 2018. Hope everybody had a great break. Great to be back in the room and getting things rolling here again. Pretty much left out outlook for week 1 of the markets, as we'll take a look here to see how we did in week 1 for 2018. That's right. Let's get a quick recap here, as actually I've already posted the week 1 recap here, so you can again see these charts. But let's just go ahead and run through the video and see where things are headed in 2018. As currently price action on the charts here, you can see the 4 indices: RTY, NQ, YM, and ES from left to right. And the RTY starting to still build up more volume, as the TF Russell will be rolled out this year in 2018. Volume across the board, just around the 60-day period average. You can see the ES popping up there a couple days above that average line. But again, open gaps moved up on price action. What a week it was on all the indices, making some new all-time highs. Count them, 1, 2, 3, 4 almost new all-time highs here, leaving some open gaps in its trail. Taking a look at the moving averages here on the S&P 500, as the ES futures still holding above the 10 or all above respective moving averages. No pullback here, no 10 crossing below that 50 price action. You can see just small amounts of on a daily chart popping below the 10, but regaining that traction as it has been for so many months now. And here we can see and appreciate that weekly chart on the ES. Here we are, 13-month uptrend from post-financial crisis in 08, 09, and still running upwards here in the last 13 months as we continue to shorten that MML time period. Give us some upper level targets here as we begin Q1 of 2018. Here we can see on the weekly chart finding some consolidation there in the months of November, December, a little bit of an uplift, and to start 2018, bang, to the upside. All right, so there's our ES futures looking at the S&P 500. There it was in week 1. Nice move to the upside off the MML lows on a daily chart. Count them, 1, 2, 3, 4, 5 to the upside, up to the resistance MML high. So we're up here. Short term on the weekly, again, we have those upper levels up ahead, but hey, price action still, momentum is upside, very clear and strong. Take a look at our supporting ETFs as the VIX holds at the low 9s and moving averages are all in sync to the upside. Let's take a look at some of those favorite ETFs that give us a bigger picture on the overall market. Let's take a look at the total stock market index price action. Again, moving averages upside here on the daily, holding above the 10 period moving averages as we head up to the short term. So you want to be looking at that total stock market index, a dual line there at 140.63. So we'll see if we can break into the zone, if we hold or still break above. Again, what we're looking for on those Murray math levels for long-term projections, including Fibonacci numbers, is to see where is price action. If it lifts above the resistance, comes back down, and starts momentum downside, breaks below that 10-period moving average, then I will surely raise my flag with the perma bears and start salivating to the downside for a correction to close out those open gaps. But until further notice, VTI, Total Stock Market Index, very strong to start out the year. Taking a look at the FFTY fundamentals on the IBD 50. Again, I'm a follower of the IBD fundamental stocks, or at least ETFs. As far as doing all the research, I don't have to do it. They do it all for you. But again, I want to see, here we are in week 1 of 2018. Price action after some consolidation. That was one of the indicators here that I was thinking maybe a correction here. Strong stocks pulling back here in December, but gets the lift back upside off the MML lows. Holds here around the 100 period moving average. But it was the MML lows here at the reversal. Bounce a little bit back upside. Again, I want to see the uptrend momentum will have to be on a breakout back upside above the former high here. But weekly, nice surge back upside. So I got to see the fundamentals strong again. FFTY together with the VTI indication of a so far a market that's in current uptrend. Whether it's strong or not, that's always open to interpretations, as give you a little bit of my 3 cents here today in week 2 outlook. All right, looking at some of the other charts. Let's take a look at the FDN. That's the ETF for the tech industry here. Price action on the FANG, not the tech. We're not looking at the sectors here. We're just looking at the ETF, focusing on the FANG stocks. Microsoft here finding the support off the 50 there back in the beginning of December. Gets a nice uptrend here, upsurge in week 1 after a little bit of a slowdown here at the MML lows, and bang to the upside right here to the resistance on the shorter term, midterm, and long-term pictures here. So daily, again, something to watch for. Always when you hit a trifecta there, multiple lines of resistance, you got to wonder, is that it? Are we coming back down? But right now, nice move, at least on the intraday. And all you can keep doing, Jedi traders, continue to move those stops up, or at least rebalance, just like Jason Kelly's strategy says. Make more than 3%, take it out, put it in a bond account, take off that excess, and hopefully at some point markets will recoil, maybe close out some open gaps, end of the quarter, rebalance the ETF portfolio, and you'll buy at a lower price. That's the whole idea. Weekly, though, surge here on the FDN, nice move. So we are currently in an uptrend. There's no question. So you got VTI there. You got your FFTY, your tech stocks all showing strong trend. Throwing a dollar index ETF. That's right. If you go back couple months ago, I could pull up a chart. I'll show you exactly where we were. I told you guys price action was holding here, was resistance, and sure enough, we just continued that downtrend back down. So dollar down again. There's your current MML levels. Again, with some support here. We were taking a look at those 23 levels. Maybe next week we'll go ahead and pull up one of those old charts, but those levels haven't changed. All we did was wait for the momentum to turn back down, and sure enough, mid-December, kerplunk, and back down. And still in the news, not as hot as 2017 at the end, as Bitcoin really surely made that rush. Bitcoin gets the support back upside. Yep, you can throw those Murray math levels on the Bitcoin. There it is to the upside. Nice move as Bitcoin finds its way up almost to 17,000 here off the MML lows for the week. Short term, up to almost to the reversal levels up here, looking back up to 17,600, up to 19,375. All right, let's take a look at some, I wanted to pull up a chart here. Hang on there, Jedi traders, as we talk about the bigger picture. And again, we're looking at the intraday, and we're talking about MML levels. That's one of the, I'll show you exactly where you can find more information out here at the end of the video. But taking a look at the intraday pictures of what a wild ride for the week. I believe this was, this was Friday all across the board. Nice move on the ES, just waiting patiently for the move. Solid hike in Ashi bars, trending bars. You don't have to figure out what kind of candle it is. You got yourself a nice trend up here on the T3 moving average crossovers. You're holding above the VWAP. It was a little bit of a choppy session in the morning, but you're patient, you wait. Price action, all three indicators, meaning the charts here at the bottom, are all in the green, and you got yourself a nice move right up to the reversal on the ES to finish out the week. So really nice move. We had a nice move on the YM here, very strong. We had a first indicator here, price action a little bit sloping up on the 2 candles. You might have taken a little bit of heat. You might have even taken a loss here, but you got right back in, waited for the moving average crossover, and you moved upside. So trust me, you would have done quite well had you traded the YM. Yeah, even if you took a loss there. NQ was not so bad. 1.5 had a little bit of a move in the AM session there. So again, applying the same principle that you do to the long term, apply to the short term on an intraday. Always be ready in both directions. As you can see right here, gave you a nice move. All 3 indicators. Just got to be patient. Use good trade management. For the day trader, it can work. All right. So that's where we are, week 1 recap. Let's take a look at where we headed in week 2 as we take a look at the big picture on the daily gaps. Furthest daily gap down here, 1405. You can see volume's been pretty good, picking up on the RTY. We're not at those low 10,000s anymore. We've been lifting. So nice little bit of bouts of consolidation, surge, and RTY making its way up to some new all-time highs last week on the dailies. Take a look here. NQ, again, nice gaps up. We showed you that smaller picture, but watch 35.50 down to 85.75 for any pullback if it occurs. All two new highs here on the ES and the YM. Furthest down, 24.908, and downside 71425 with 696 on the daily gaps. All right, taking a look at the let's get to the charts here. Let's start out with the week 2 outlook. Let's just no particular order here. Let's just start out with the crude here. We can see crude on a daily chart. We're on the G contract, futures contract. Again, I like to take the daily short term for the week. There it was off the MMLOs. Very nice, around 60.16. Surprise anymore. Crude is coming up. We hit that 62 level again. Several levels of resistance, not only the short term, but the midterm here as well. Daily pig pick, we're still looking up to 62.50 here on the crude as we head up on the weekly as well. And all maintaining uptrend there on the left. We're using the range bars with the 10 EMAs, 50, and holding above all in the green. So momentum I got to go still with on the crude to the upside. Let's take a look at the ES. Believe one of my charts here. Oh, there it is. Okay. Move my charts around. All right. Take a look at the ES again. Big picture on the high time frame. 10 holding above the 50 above the range. We're still in the green here. Nice move from the beginning of January here in week number 1. Price action hitting those MMLs. We've got the short term and the long term here, and a little bit of convergence of levels. So you want to watch up to 27.54 all the way up. We got our levels higher, up 73.50. Yeah. So we're back here, and we keep talking. Go back, watch my videos, look at my charts. You'll see, even as we were hitting 2,500 here, we were looking up here to that 73.50, and sure enough, there it is up there. So again, any pullback at this point, if we break down below 26.56 on the weekly, we'll start looking at 2,500. Until that, notice right now we're holding upside. Sure enough, price action holding above the 10-period moving average. Always a pullback here to the support at the 10 is always likely. Can happen intraday, especially close out those open gaps. But right now, current uptrend, momentum upside. GC played it out as we've talked about back in rolling out 2017. We talked about, look, watch that 25, that 1250. Watch that 1250. Watch that 1250. Kept telling you, major support resistance. Bounced right back up to MMLs. There it is on the daily. Nice move on the GC back upside as it held above the key moving averages, holding above the range. So momentum back upside. I'm watching for the consolidation here. I'm watching up to 1335 on the daily, which would put us almost near that 1359 former level here back in August. So I want to see the price action here. Intraday, you got to be ready both directions. Let's see what happens up here. Any pullback back below 1312.50. Watch for the HA bars to give us a sign of trend back down to 1250 or lower. Otherwise, current momentum on the GC is to the upside. Take a look at the NASDAQ. Again, strong tech industry. FDN ETF holding above the 10 and the 50. Current trend in the green upside. Short term, I pulled one out on the daily here. Long term, we hit those MML levels. Again, look it up here to 66.99 as well as 67.97 on the weeklies. We'll take a look through the week, see if these levels change on the MMLs. All right, taking a look at the RTY. Russell in alphabetical order here, holding above the 50 as it bounced off there at the beginning of the year. Holds upside for the week, back in the green on the RTYs. Again, struggling, not as smooth, but making its way back. Right there, it hit it, 1562.5. Nice move on the dailies. Again, we have levels upside, but short term, we've been consolidated up here. Want to see that reach up to that 1578, break that above. And if it does come back down, I want to see a break below that 15625 on trending HA bars. Otherwise, right now, we're looking up to that 1585 level up here on the Russell. All right, taking a look at the YM to finish out the indices here. Nice price action there on Friday as it lifted above, 10 above, 50 above. Weighted moving averages, simple moving average, but all in the green on the YM, so all things in the green. Holding upside, watch for that 25,391. What a move. As soon as it broke that 25,000, bang, it just went up 120 points from there as well, and now we ended up almost 250 plus, 278 plus for the week. All right, so watching up to this level, 781 is the area on the weekly. And then short term here at 25,391 for the week. Taking a look at the industrials and the transports. Another key indicator of market momentum there, especially on the YM. Got a nice lift on industrials all the way up to the resistance here, as well as a little bit of finishing out on the daily on the transports here. But again, a nice move holding above the key moving averages. So remember what we say. As long as these two are in sync, momentum in the market will follow through, and that's exactly what we have here. So you want to watch these two industries moving together in sync. And as well as the NIAD and NYSE, you want to make sure the NYSE is following the Dow Index, that they're in sync, and that's exactly what we had for week one, so momentum to the upside. So, Jedi traders, I think you agree. Maybe you don't, but at least what we see here is markets key, strong in strength to the upside. All right, so following into Sunday Globex, which is up here in a couple of hours, price action on the 30-minute MMLs. I'd like to take a look at not only so let me pull one of these up. Let's open up the ES. So what I have here is you can see what I tend to like to get on a 30-minute chart, the MML levels. For pretty much a trading session versus a weekly big pick. You can see the nice weekly here from the beginning of the week. Again, sometimes a little bit of shift in the MMLs for the week, especially if there's good, strong price action. But again, off the MML lows with a target up here in this area for the week, for at least the swing trader, 30-minute levels. And then the intraday, you just spread this out a little bit, and you got yourself a nice MML support. Depends on where you get in and how you manage on the way up. Take a contract, several contracts off halfway, work your way up, and use those HA bars. Just simply go to the intraday like we do all the time, and always be ready for both directions. But there it is. There's that move from Friday. So you're sitting on a 30-minute chart, or you're sitting on an intraday, and you get yourself the precise entry, and you can sit on the way up. These are exactly what we're looking for. Intraday trending bars to put us, splice us into the bigger picture, and that's what we got there on Friday. Nice move. All right, one thing that we're looking ahead, as we've talked about Murray math levels, again, bigger picture, we love it. Intraday, it works, not necessarily always for the counter trend. If you're looking for that, I'm looking for all things lining up. If it's all three in the red and we're going from MML high to MML low, beautiful, great strategy to combine together. One other thing we've been working on here is a strategy that I heard some years ago. Again, it's kind of what led to where I am today, but it's called the caveman strategy. No particular name in regards to the simplicity of it, but again, when you're using a chart, for example, let me pull up the YM, as we had a nice YM strong market here. And again, you could play around with different volumes, intraday, Globex, but simply a nice indicator marker showing a break above a previous bar. Very similar strategy with moving averages crossing over here. Again, I'm looking for it, and I'll tell you in a moment where you can find out more information. Looking ahead to do a webinar on this with Infinity Futures as the new contest comes up for 2018. I'll tell you more about that here in a second. All right, so again, working on a fantastic strategy. If any of you are interested in automating a strategy, this might be one that you might want to consider. So pulling out something from the old bag that kind of led me to where I am today, putting it here on the CR charts. And again, thank you, kudos to all the traders in the room that contribute in putting that together. All right, so looking ahead to this week, let's take a look at the calendar. As economic calendar here, we have starting out with Monday, January 8th. We have consumer credit, we have job openings, we have CPI, both in China, India, and here in the United States. We got retail sales numbers coming out for December. Consumer Tech Show kicks off on Tuesday. Q4 earnings, we got bank stocks coming out, JPM, Wells Fargo, and PNC, including Delta Airlines and BlackRock reporting. Again, we want to keep our eyes out ahead for market, obviously Q4 data coming out in the next at least month and a half to 2 months. All right, Jedi traders, here I'll post here in a little bit. Again, my uptrend technical probability still leaning towards the upside as we roll into week 2 here. Again, you got to be ready intraday. If you're on the long term, it's always an opportunity to either rebalance the portfolio or move the stop up. If you're trying to guess the tops, good luck. I think Perma Bear is pretty much a crow this week, and Salivate think that 2018 was going to be the year to come down. And really, after reading a newsletter here from Moores and Cabot, one of the followers on the macro picture that I follow, including Jason Kelly, truth be told, guys, this might be a mask for the next 2 years. If you think about it, this was again, not my interpretation, but a view that from all the natural disasters that happened in 2017, California fires and the hurricanes, there's your increased spending that might be masking a true good economy. So first, that is very possible. You got a lot of increased spending on recovery. So 2018, the next 2 years, we'll see a lot of that. But I want to see the Q4 data. That will be important as long as companies are being strong. But keep that in mind as we roll out into 2018. Surely, and not in this Jedi trader's mind, is there a pullback happening as of yet. Everybody can guess. Until the technical indicators show that, that's where I stand. And that is a wrap for this week. Week 1 recap and week 2 outlook for 2018. And how I see them on the key futures markets. Feel free to stop by at tradingfibs.com. A lot of great information here on MMLs. Go ahead and click on the tab, click on the ETFs, and a lot of other great things here at the website. You can also check me out on my social media outlets, including Trading Fibs here on Twitter. My trading mantra, one simple strategy, any market, any chart, any time frame will keep you disciplined. And again, you can follow my tweets here, both and on StockTwits as well intraday. I leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and I leave my bias at the door when trading. All right, for those of you that are interested in joining us, like-minded traders in our trading room, feel free to stop by here. Check out the membership page. You don't have to join or anything. You just send me an email, David at Trading Fibs. We'll try and get you in the room to see those setups with other like-minded traders. Again, the goal here is to find those setups in the first 2.5 hours of the day. PM chop, not much into it anymore. By the way, a call out to the Infinity Challenge, the live trading challenge. Again, I'm one of the, if you go over here to certified coaches, I'm right there. Let's go ahead and click there. There I am. And got that psychology. I thought they changed my picture. I'll have to get back on that. Anyway, trade trending plan. I don't look like that anymore, do I? Trend Trading Plan webinar series. Again, you can check those out also at my website. I did another one, and we're going to talk about that caveman strategy coming up as well. So check out my pages here at my website, and you can feel free to email me anytime you have any questions. Again, if I forgot anything, I'll make sure I get it out there to you this week. I'm David from Trading Fibs. Have yourselves a Blue Zone day wherever you may be. Have yourselves a good day, a good night, and good trading to you.